Alishia, what we have seen with the Kenyan economy is that most of the sectors that have always propped up the economy have not been doing so well, especially agriculture. We've also seen a bit of the coffee and production going down, but tea prices have been going up, which is a good thing. But also, if you look at manufacturing, there are some sectors that are not doing so well. Cement production is up, but again, the industry has not picked up so well. The motor industry is also not doing very well. So if you look at these sectors that always prop up the economy, and if you compare them with the last couple of years, they have not been doing so well. So we do not really expect much this year. But there are also sectors that will prop up the economy. So if you look at all this aggregately, what we forecast is between maybe 2 and 2.5% is what we will see in the, as a growth for this particular year.
Mm-hmm. That for this year, while the outlook is a little bit more optimistic for next year. I mean, we've got AIG saying they're targeting 4% growth next year, weather pending, but also a lot of it riding on a fiscal stimulus, which is expected to be implemented in a timely manner. What kind of fiscal stimulus is being factored in here? What are you anticipating needs to happen for economic growth to get back on its feet again?
Alishia, what we need to see is the money moving into the sectors of the economy that are expected to grow. If we can build our infrastructure, then we expect to see the growth in the sectors in the economy that are going to prop up GDP. If we can see more industries coming up, if we can see the road structure being prop up, as we have seen some projects coming up and going on really well. So if we can see this money coming into these sectors, into the motor industry, if we can see electricity production going up, going forward, we'll see industries cutting down their costs. We'll also see the cost of communication coming down with the undersea cables also coming in. So if money moves at the right time, in the right manner, and also to the right sectors, then we will see the economy growing really well, not just next year, but also in the years to come.
How confident are you in the government's ability at this stage of the game to actually implement this full force in the right manner at the right time?
I have to admit we have a bit of a confidence issue because there's a lot of politics involved when it comes to the government. But at the same time, we've seen a lot of projects coming up. We've seen the Prime Minister coming up with strategic papers and a lot of other ministries. So in as much as we might not have 100% confidence in the government, we believe that with the projects coming up, with the strategic papers that have been written and that are going to be implemented going forward, in as much as it might not come in the timely manner that we hope it will come in, maybe slowly, but at the end of it all, the money will flow in. There's a bit of a problem with the drought and money being channeled to feeding programs and other sectors that might come in. So we might see a bit of a downturn, but I believe that with time we'll get it right and the economy will pick up.
At the same time, Alice, a lot hinges on credit to the private sector becoming readily available. I mean, what kind of progress are we seeing on that front, where we know the banks in Kenya have been pretty resistant to actually lowering their interest rates in tandem with the Central Bank of Kenya's?
What we've seen with the private sector, since they are not able to get a lot of money from the banks, is they've ended up going to the bond market. And the bond market is really developing. We've seen a lot of companies, especially Kenyan being the latest one, and also Safaricom coming up. So what the companies are doing, they're moving more to the bond market, and the bond market is developing with the automatic trading system expected next month. So I think what we will see, in as much as they might not get a lot of money from the banking sector this year, they will get from the bond market. But we also believe that the banking sector will recover, especially coming from next year going forward. So credit to the private sector will improve as we go forward.
Well, certainly it's local investors that have shown keen interest in the fixed income market, really seeing bonds oversubscribed over in Kenya. What happens, though, Alice, in your books, if Q3 performance comes in as expected, if not better, and local fund managers start seeing the merit in equities again? Are you anticipating this flood out of the fixed income side of things into equities? How do you see this dynamic shifting in that context?
Alishia, I really don't see a flood to the equities market because what we've seen this year is a lot of companies have not done so well in the first half, and even in the third quarter with the results that we're expecting, we're not really expecting very, very good results. They may be either flat or a slight growth. So what we'll see is still the focus will be on the fixed income because there's a lot of confidence issues with investors, most of them having lost money, and also the equity market not picking up as much as expected. What we might see maybe is towards the end of the quarter, we might see a bit more of activity, especially from the fund managers as the quarter comes to a close. But within this quarter, I really don't see a flood to the equity market from local investors. I still think there are more of speculation, come in once the price is down and then start selling off once the prices go up. But the fixed income market is expected to continue doing well in the fourth quarter.